And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and as always, we're working on your information flow. And I'm going to do so today by hitting you with a topic that might blow your mind. It may make you sit back in your chair and go, whoa, dude, that was crazy. Or you could just look at the radio or look at your screen and just say, really? Is that all you got? So let me see which reaction you get. And there's a possible fourth reaction, which has nothing to do with the three reactions that I thought you might have. You do you. You have your reaction. And I'm going to tell you something very prophetic right now. Every tangible aspect of real estate, the dirt, the bricks, the views, the neighborhoods, they all ultimately get reduced to, filtered through, and decided by quantitative metrics. Yeah, I used a big word on you. Quantitative metrics. Technically, it's two big words. I don't know if metrics is a big word, but quantitative is big, right? It's a word that makes you go, oh, I don't want to listen to what this guy's saying. He's going to go way beyond my thinking skill. And if you think that, correct yourself. Because I don't do that on this show. Because I'm part of the Lifestyles Unlimited community. And one of the things that we do as part of the Lifestyles Unlimited community is we take real estate and we break it down. We break it down to its quantitative metrics, which is just fancy stuff for how it's packaged. The game is really entirely played in spreadsheets or models or data feeds. Yeah, or a combination thereof. That's really how the game is played. Now, some of you think, now, wait a minute. I've got a different scenario here, Al. I think real estate is done differently. All right, well, let's hear your approach. I think you have to go and look at property. Well, I don't disagree with you, but the question is when? When do you go look at property? And the answer is when you need to. Now, some of you absolutely think that the first thing you have to do is physically go to the property. You have to see it, maybe touch it, experience it. And if you think that's the way you invest in real estate, you're very wrong. That's not how you decide or figure out if you're going to buy an asset. Real estate is really just numbers. It's just numbers. Have you noticed on this show, if you listen to the show, I mean, you might be new to the show, in which case I'll excuse you. But for those of you that do listen to the show, do you notice what I do to you when I'm talking about real estate? I talk about the numbers, right? I get into the numbers. I talk about the 5 ways we make money, or I should say it correctly, the 5 ways we do make money in real estate. And then I articulate those numbers to you. On occasion, I'll tell you about an asset. Sometimes I get information on an asset. Sometimes there's photos attached. And that's cool. Because after I get through looking at the numbers, I might want to look at the photos. But here's the thing. If the numbers don't work, we don't invest. It's as simple as that. So when I tell you the numbers have to work, the numbers have to work. They have to make sense. They have to dial into your game plan. They have to meet your goals and objectives. If the asset doesn't do what you need it to do, no matter how pretty it is, you need to cut it loose. Yeah, cut it loose. You know, it's funny because I was looking at an asset this morning. It's down in the San Antonio market. I like the San Antonio market. I think there's great opportunity there. I have invested in the San Antonio market in the single-family space, also the multifamily space. But when I tell you the San Antonio market has good numbers, I mean it. The deal I looked at sounded like a good deal. It did. It sounded like a good deal. It required about $20,000 of personal investment to get into the deal. It would allow you to capture $50,000 more in equity. So you'd start with $20,000 of cash that you inject into the deal. And in exchange for that $20,000, you get $20,000 worth of equity. But because you understand the Lifestyles Unlimited process, the methodology, the roadmap for how we acquire and renovate and operate properties, when you understand all of that, you also understand you're buying at wholesale pricing. You're renovating at wholesale pricing. Your all-in cost, everything it requires you to spend money on for the asset is still at wholesale pricing. Yet you command retail pricing in the marketplace, and you're able to get financing based off of that retail financing. What this allows you to do is it allows you to put as little of your own money as possible into the deal. In this particular deal, it only required $20,000. Now, I know some of you are going, wow, $20,000, that's a lot of money, Al. Yeah, if you're going to do real estate right, you've got to inject fairly healthy chunks of money. But in the overall scheme of things, where else can you inject $20,000 into a deal and pick up an additional $50,000 of equity? Because that's the difference between your all-in cost and the retail pricing. That's an extra $50,000 in value, giving you a total of $70,000 of equity. In the next segment, we'll talk about the cash flow component of this asset. Stick around. Welcome back to the show. So if you're just joining me, I'm hitting you with a bombshell. I am. I'm letting you know that real estate investing, it's boring. Yeah, I don't know if I made that clear enough in the last segment, but I'm making that very clear in this segment. Real estate investing, it's boring. It's number crunching. It's figuring out if an asset will work for you before you waste a lot of your time and treasure trying to buy something that isn't going to work. That's why we do it the way we do it at Lifestyles Unlimited. And one of the things that we've done at Lifestyles Unlimited is we've created an organization with sister organizations that provide resources and services to the Lifestyles Unlimited community. One of those organizations is Lifestyles Realty. Now, what is that? What is Lifestyles Realty? Lifestyles Realty is a separate organization from Lifestyles Unlimited. When you become a member of Lifestyles Unlimited, you're a part of the Lifestyles Unlimited organization. And then depending on what membership program you choose, because it's your choice, you decide what services you want, because there are services that you might need. There are services that you feel you don't need. And it's totally fine either way. Lifestyles Unlimited is designed to give you all the support that you need, provided you need it. Not everybody needs it. I'm serious. Not everybody needs all of the services that Lifestyles Unlimited's auxiliary organizations provide. But guys like me, I want it all. I want it all. I do. And I get it all. And I'm cool with it because, well, it's what I want and it's what I get. So what do I get from Lifestyles Realty? I get access to a team of realtors that are dedicated to serving the Lifestyles Unlimited community. They don't serve. It's kind of like let me draw on a comparison. It's kind of like the automobile insurance industry. There's an organization out there, you've probably heard of them, called USAA, and they provide automobile insurance and banking services to the veteran and military community. That's what they've done for a very long time, and that's who they focus on. They don't you have to have a military relationship in order to become a member of USAA. And when it comes to Lifestyles Realty, you have to have a relationship with Lifestyles Unlimited in order to use their services. Yeah. And here's what's neat about them. They understand the investor mentality. That's very important. They understand what we're looking for in the form of assets. They understand our mindset. They understand what a good deal looks like. And then they send out information to the community saying, hey, I've got one that might work for you. And that's kind of what we're talking about today, is one that Eshell sent me that could work for me. Now, I already told you about the equity capture potential of this deal, the fact that you can inject $20,000 into it, and that $20,000 becomes $70,000 of total equity, because you're going to capture an additional $50,000 of equity over and above the $20,000 you're going to put into the deal. And by the way, that $20,000 that you're putting into the deal, you know what it actually represents? Less than 8% of a down payment, because the value of this asset, when it's all fixed up in the neighborhood it's in, is $253,000. That's what the comparative pricing is in that neighborhood for this type of asset. But this asset is not in good shape. As a matter of fact, you can buy it for $143,000. That represents buying it for like 56 cents, 57 cents on the dollar. Where else can you buy assets for 57 cents on the dollar that don't depreciate? Yeah, because you were going to say, well, I can go to the auto auction and I could buy assets all day. Yeah, but they depreciate, don't they? Real estate tends to appreciate. In other words, go up in value, which is just another way we make money in real estate, through the natural appreciation. And of course, there's the principal pay down. And those two elements right there add to the equities that we own in the asset. Pretty cool stuff. So I said I was going to talk to you about the cash flow. The cash flow on this deal returns the absolute bare minimum that I would even consider. An 8% cash-on-cash return. What does that mean, Al? That means when you collect the rent and you pay your mortgage insurance, if you have it, if you're doing it right, the Lifestyles Unlimited way, you don't have mortgage insurance. You do have insurance, hazard insurance that you need to pay. You have property taxes that you need to pay. You have a mortgage, principal and interest, that you need to pay. When you pay the expenses associated with the asset compared to what the asset can rent for, in other words, what you can get in monthly rent, this asset produces about $130 per month in cash flow. Now, I have two rules when it comes to cash flow. The first rule is it must produce at least an 8% return. This one does. It's right at 8%. You might be wondering, how did I calculate that? Well, I took the $130 per month and I annualized it. So I took 130 and multiplied it by 12. That gave me a $1,560 annual cash flow number. I took that number and I divided it by the 19,500. I know I said 20,000 earlier. It's really 19,500. I rounded up. I divided it by that 19,500, and that gave me my 8% cash on cash return. Now, that second rule that I have is that cash flow needs to be above $200. So this particular deal, as sweet as the equity capture is on the asset, doesn't meet that requirement for me. So it doesn't matter how pretty this house is. It doesn't matter that it's the perfect 3-bedroom, 2-bath, 2-car garage. It doesn't matter that it's like right at 1,800 square feet. It doesn't matter that it was built in 1999. It doesn't matter that it's in a location that I know very, very well, that I've made a lot of money in. It doesn't meet my requirements. So what does that mean? It means I walk. It means I'm not going to do this deal. I'm not going to pursue this deal. Now, this deal may work for somebody else, and that's totally fine, but it doesn't work for me. It doesn't work for my requirements. Remember, I said it's all about you. I will always tell you it's all about you. And in this case, it's technically about me, and it doesn't meet the acid test, so it needs to go. So this one's done. So what do we do now? We go on to the next one. And that's how you do real estate, folks. That's how you do it. In the next segment, I'm going to get back into this discussion of real estate. It's just numbers. Stick around. Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and as always, we're working on your information flow. And I'm doing so today by basically just telling you that real estate is just numbers. I know you think I'm full of it, right? You think that real estate is land. Real estate is buildings. Real estate is roofs. Real estate is floors. Real estate is garage space. Real estate is indoor plumbing. Real estate is bedrooms. Real estate is, okay, it has all that stuff. But when it comes to you being a real estate investor, there's something we're trying to protect. There really is. There's something we're trying to protect, and it's your time. We're all about maximizing our personal time for our own benefit. And that's part of what we do at Lifestyles Unlimited. We learn how to get our time back. And we learn how to do that by investing in assets that pay us cash flow streams, allow us to generate equities, and allow us to ultimately migrate away from a job by replacing income with the passive income that comes from real estate assets. Now, that kind of sounds like it might be hard to do, right? And some of you are going, yeah, dude, that sounds pretty hard. Yeah, I don't know if I could do that. Well, let me tell you, if a knucklehead like me can do it, you can do it too. And I say that with all sincerity. I really do. I don't profess to be the smartest guy in America. If I were the smartest guy in America, maybe I would be flying, I don't know, rocket ships to Mars, or making those rocket ships land back where they took off, or inventing companies that, are way worth more than I'm actually worth. But that's not me. That's not who I am. I'm a guy that likes to help other people. I really do. At my core root of who I am, I want to help you. And I want to help you understand that real estate investing is a legitimate path to your financial freedom. I'm serious about that. I know it to be true because I've lived it. I've gone through the natural progression of the real estate investor. And I've come out the other side. And now I'm privileged to help people like you understand what I understand now. Now, I never said I was a stupid man. I'm educated. I have a bachelor's degree from the University of Southern California. It's a bachelor's degree in business science, technically in business administration. It's a BS in business administration with an emphasis on marketing. That's my undergraduate degree. My master's degree, I obtained that from the University of Phoenix. It is a Master of Arts in business management. The kind of how do you deal with the people side, not necessarily the financial side. I have a professional designation. I am a CDFM guy. What is that? CDFM guy. Certified Defense Financial Manager. It's basically a designation, kind of like a CPA designation for accountants. This is for the military environment. Understanding how finances work in the military world. Yeah, you want to talk about crazy? Talk about putting your arms around an elephant. That's what that designation is all about, putting your arms around an elephant. So I'm pretty smart, I guess. But here's where I was lacking. That business administration degree taught me how to work for somebody else. That business management degree taught me how to work for somebody else. That professional designation taught me how to work for somebody else. How to apply my knowledge, my skill set to their business plan. And you know what I did? I did exactly that. I did that in the military. I did that when I was out of the military. And then I realized when I was out of the military, I was wanting to be retired. And I really wasn't retired. Even though I was retired from the military, I wasn't really retired because I had to go back to work. That was terrible. There was something missing, something that I didn't understand, something that had not been taught to me. And that's the wisdom that Lifestyles Unlimited brings to the table. That's why membership in this organization is so important. Because you're going to be inundated with knowledge, wisdom that nobody else has bothered to share with you. Maybe you had an uncle at one time tried to share this with you, and maybe you were just too young and too ornery to listen. Lord knows I was that way. Yeah, I was definitely that way. So what does Lifestyles Unlimited teach you? It teaches you about real estate, how to buy it, how to renovate it, how to operate it, how to make money from it, how to go out and get another one, and then another one, and then divest yourself of some of the initial ones you bought and buy two to replace the one you just let go. That's how it works. And it works really well. And if you're not a part of it, then you're just going to continue doing what you're doing. Now, I know the stock market is at like all-time highs. Okay, technically the Dow, at least last I checked, the Dow was not at an all-time high. It was darn close. I know the NASDAQ and the S&P 500 were at all-time highs. So you might be thinking, I'm just sitting pretty. I'm sitting fat on all this money. And that's just it. You're just sitting fat on top of a bunch of money that's really not doing a lot for you. And you're saying to me, well, Al, stock market's at all-time highs. Doesn't get any better than this. Every time the stock market gets to all-time highs, everybody says it doesn't get any better than this. And then guess what happens? Stock market falls off. Now, it may not happen this week. It may not happen next week. It may not even happen this month. Heck, it might not even happen this quarter or this year. But eventually the stock market does what the stock market does. Something happens that spooks the stock market and you write it down. So let me put a suggestion in your mind. And I'm not telling you to act on this, but I want you to think about it. What if you took all of your money out of the stock market while it was at all-time highs? What if you took all the money that you have physically put into that, which is your basis, and then take the gains out on top of it? What would you do with all that money? And right there, that notion scares you because you've been conditioned to believe you're not allowed to touch that money. But I'm suggesting maybe you touch it. Maybe you take it out. Because even though this deal that I recommended earlier in the show didn't work out for my investing goals and objectives, it doesn't mean it doesn't work out for somebody else. Because we're not robots at Lifestyles Unlimited. We're not plug and play. We get to figure out our parameters based on our needs, our requirements. So that deal may have worked out for somebody else. It may have worked out for you. Imagine you taking like $20,000 and turning it into $70,000 just by buying the asset. Think that's a deal changer, a game changer? I think it is. In the next segment, we'll explore this topic more. Stick around. Welcome back to the show. So are you tired of me saying real estate is just numbers? Well, I hope you get tired of it, but I don't. I don't get tired of it. Just humor me. Let me do what I'm going to do, because at the end of the day, I'm here to help you. And if I can get it through your head, and I know some of you got a pretty thick skull, trust me, I know this to be a fact, because my parents told me a lot when I was a child that I had a very thick skull. So I get you. I get you. We got to get through that thick skull. Real estate is just numbers. So how can I prove that to you? Well, it's simple. There's really three ways to value real estate. Yeah, a property's worth isn't mystical. It's a function of either the income approach, a sales comparison, or a cost approach. What does that mean? Does that mean the appraiser's coming to our house? Maybe. Maybe not. Maybe you should know these things. Maybe this is part of educating you. Maybe this is about helping you understand that real estate is just numbers. Yeah, it's just numbers. So let's talk about that income approach. What is that? That is how you value multifamily assets. Any group of assets that effectively is 5 units or more under one or more roofs. Does that make sense? I mean, it could be a collection of single-family houses in a neighborhood that an investor bought up, but I don't know, it's kind of a stretch. Really, it's more, hey, do you have 5 units in the building? Or do you have 8 units in the building? Or do you have, say, 40 units across 10 buildings? So there's usually a component of multiple units within a structure, and then maybe multiple structures. Multifamily is 5 units or more. Just understand that to be a truism. The income approach is used to determine the value of multifamily because it is valued the way all other commercial real estate is valued. You take the income that the asset produces. You subtract the expenses. You do not include CapEx expenditures. And then what you get is something called net operating income. It is the net of the income left over after you take all the expenses off. You take that number, you divide it by the prevailing capitalization rate for the asset class in the market where it's at. And that's how you determine value. Now, multifamily is something that people buy because they're buying income streams. Kind of like you ought to be buying income streams, because that's how you get yourself retired. Now, maybe you don't want to wrap your head around multifamily just yet, and that's totally fine. Probably shouldn't be wrapping your head around it just yet until you get educated by Lifestyles Unlimited. What's that sales comparison that you're talking about, Al? Well, that's how you value single-family assets. Now, I'm going to say something that's going to sound oxymoronic, but I'm going to say it. Duplexes, triplexes, and fourplexes are considered single-family. Now, I know, multiple doors in a building sounds like multifamily, right? Needs to be 5 or more. 4 or less is lumped together with single family. It is valued not using an income approach. It is valued using a sales comparison approach. So what happens is you go in and you adjust the price per square foot based on comps of properties that recently sold within a certain period of time, within a certain area of your subject property, and that's how you determine value. That's how your appraiser does it. That's how we do it at Lifestyles Unlimited. It's not that hard to learn. You can do it too. Now, what's this cost approach? What is that? Well, cost approach is really used by the insurance industry. What they're trying to determine is, what does it cost to replace the property if the improvements burn to the ground. Now, they're not worried about the land value. They're only worried about the actual improvements. Because if land burns, so what? Just rake it, right? But if the improvements burn, well, now you got a lot of land clearing you got to do, right? And then you got to rebuild it. So the cost approach looks at the replacement cost minus any allowable depreciation. And that's how your insurer is going to look at the value of the property. Here's the takeaway. I want you to strip away the storytelling. Charming little bungalow in a vibrant neighborhood, la-di-la-di-la-di-da, don't care. When you strip all that stuff away, you're left with discounted cash flow models projecting rents, expenses, vacancies, and exit caps years into the future. Change the growth rate assumption by 0.5% or the exit cap by 0.25 basis point, and the value swings by hundreds of thousands of dollars. The building didn't change, but the numbers did. See how that plays? Sometimes the value of your property can go dramatically up or down just based on market forces. Nothing to do with anything you did to improve or not improve the property. We see that happen periodically in the real estate markets. We just went through a period where real estate values went up and up and up and up and up. And now they're cooling off a little bit, but they're not like crashing through the floor. Yeah, we see declines in prices in some markets right now, but that's okay. Because when you look at the price increase running up to that decline, we're still way ahead. Okay, you're not way ahead if you bought at the peak. But here's what we know about real estate. It kind of does what your stock stuff does when your financial planner says your dollar cost averaging. Yeah, you know what that means, right? Okay, well, real estate kind of does that too. But here's the thing with real estate. When we're buying in, we're not looking to get out in a day or a week or a month. We're looking to hold for at least a year, and in many cases, 3 to 5 years. Now, why do we do that? Because we're looking for the income streams that the asset is producing, and we're also taking advantage of the natural appreciation, the principal pay down, and the tax advantages that occur by holding the asset. We're periodically increasing the rent based on the fact that our costs of owning the property, usually property tax and insurance, goes up. So we have to raise our rents to offset those costs. Otherwise, it'll affect our cash flow. These are normal increases in the marketplace, and it's no different than any other business passing on the costs and the expenses of doing business to the consumer. Now, you may not like that concept, but that concept exists throughout America. The one thing that we do that most investors don't do is that we take that physically broken asset or that financially broken asset or that combination of both physical and financial brokenness, and we fix it. We improve it. We improve the asset, and we fix or repair everything that could go wrong in the next 5 years for two reasons. One, we don't want to deal with it during the time period that we own the property. And two, we don't want our resident to have to deal with it either because it's an inconvenience for them. We want them paying top of the market prices, if possible, but at least fair market rent for an asset that is better than most of the competition. And people will pay a third of what they earn for the right to live there. We don't worry about maintenance because we fixed everything that could go wrong. So it's a good experience for us and a good experience for our resident. And that's what it's all about. It's really all about finding a financial methodology to understand that an asset will work or not work for you. And if it does work for you financially, if the numbers work, then you pursue the asset. Then you acquire the asset. Then you renovate the asset. Then you put the asset back into service as clean, functional workforce housing. You get fair market rent for it. You sign a 1-year lease. You cash out of your hard money loan and you go into long-term financing. And then you operate the asset for as long as you choose to operate it for. And then you eventually get to an exit strategy and you refinance or you sell the asset. You take the money out of there and you buy additional assets with the money that was produced because you did everything right in the beginning. This is how the real estate game works. This is why real estate is just numbers, and this is why you have to understand the numbers. Because if the numbers don't work in the beginning, they won't work in the end. If you want to do what I'm doing, you want to do what the members of Lifestyles Unlimited are doing, go to lifestylesunlimited.com. Click on Start Here, and let's get you going.
Thank you for listening to Lifestyles Unlimited's Real Estate Investor Radio Show. Ready for more of the map? Visit lifestylesunlimited.com. Explore our videos and articles. Click on the radio tab to access past show podcasts. View the radio show schedule and listen to our best of radio shows. Want to continue the conversation? Follow Lifestyles Unlimited on Facebook today. We want to meet you as well. Sign up for a free workshop at lifestylesunlimited.com. Until next time, remember, it's not the money, it's the lifestyle.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers and do not necessarily reflect the opinions of this station, its affiliates, its management, or advertisers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.